Sometimes the biggest trades fly in the face of your greatest fears. Stay tuned, we'll be right back. Fear is probably the number one thing that destroys a lot of traders. Hope, greed, and fear are three of the emotions that people fail to really fully grasp when they're learning to paper trade and when they're learning to trade. They'll often look at charts for entry and exit signals, but usually the largest reason for traders self-sabotaging themselves are hope, greed, fear, and pain. But fear is often the number one thing that flies in the face of preventing traders from taking potentially their best trades in terms of low risk, high reward potential. Often you'll see where a market has come off of a low from the open of the day and virtually gone straight up, potentially maybe for months on end. At the beginning of a bull run in a currency, and even doesn't matter what time frame, often these markets will reverse off of a high or a low, and often the question you'll ask yourself is, how did somebody know to buy there or to sell there? So often you need to go back, and one of the things I love to do is go just with empty charts and look for areas of where we see, you know, these large engulfment patterns on weekly charts, monthly charts, but really even day to day on the hourly chart, you'll often see where order flow occurs. And that order flow is where traders have cumulatively, the smart money, started to make decisions about where they're going to take their positions in order to take the other side of a market. And often that's the trap where the majority of retail traders get vacuumed into. So I'd encourage you to either be using longer time frames to establish your levels, or always be looking to the chart off of the time frame that you're using. Like Al Brooks talks about it in his price action trading books. He trades off of one time frame. I know on the end of day trading that I use, yeah, you can go to weekly and monthly charts, and there's clearly some levels. Peter Brandt talks about looking at these consolidation patterns on weekly and monthly charts. But literally week in and week out, there's levels from the left side of the market where one side's been trapped, and you have to always ask yourself the question, who's about to experience the greatest amount of pain? If you're about to enter into the market and take a position, look at that market and try to see if you can ascertain where there's a trapped trader. If not, chances are you're entering into the trap. Fear is when the trades look obvious, those are usually the ones that fail, and they're the ones that trap the most traders, especially the retail trader. So remember who you're up against. You're up against the smart money. They call them that for a reason. They're probably better educated. They probably work extremely hard. They're very competitive. They have access to information that you and I don't have. A lot of the garbage that's peddled on the internet is about day trading and short-term time frame trading. And there's very few people who are able to be successful long-term using those time frames. So one of the ways to put the odds in your favor is to go out to longer time frames where your spread and risk versus the reward potential are a lot more in your favor. Fear is the one thing that will cause you to do a lot of things that at the time you can rationalize, but when you review them in retrospect make no sense at all. So fear, go back, study your charts. Remember, every single trade is just another trade. Your risk on any one particular trade should never be any greater, really, than any other trade. Whether that's 1R for the time frame you're trading, whatever that is for you, 1%, 0.5%, 2%. So at any point when you enter the market, psychologically you may be perceiving fear, but your risk is always the same. So don't let fear cripple your trading, traders. Remember that. Every single trade is just another trade. So whether you think you're buying low, or you're counter trending, or you're buying with the trend at a high, your risk is always the same. It's your perception of something different in terms of how you're interpreting the price action that makes you feel that there's a greater amount of risk in taking that trade at that particular time. So Go back, look at your charts, stay focused, stay disciplined. Always manage the downside. Every trade should have the same amount of risk, and it's a 50-50 coin toss, really, hopefully. But at the end of the day, traders, it's always the same amount of risk if you can control that long term. Hopefully you got some value from today's video. If you like it, please share it on Facebook. Again, thank you for all the comments and the questions, good and bad. I'm trying to be fully transparent with the information. You know, it's a Monday here in Perth. We're just starting the week again. There's going to be some big moves this week. We're heading into the end of September. There's a lot of question around the US dollar, and some of the volatility starting to show. So stay disciplined, stay focused, and may the markets go with you. Thanks, traders.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.